The wedge pattern consists of two non-parallel trend lines. Here, for example, the upper blue line representing resistance and the lower green line representing support. And as the price converge, in other words, as the volatility reduces, the price begins bouncing within the confines of that wedge, and what you want to wait for is a break as a signal to the upside or the downside, or it can be used as a tool for buying and holding a stock until such time as that wedge is violated. As we can see, it really has not been clearly violated to this day. In this particular case, this is the S&P 100 index. Here's an example historically of a wedge that was violated. The stock is ALV, and it is trading along within the confines of that wedge from about $12 up to the 70s. However, in the lower 70s, it breaks this wedge. As you can see, it's struggling to stay within the wedge, but it does fail, tries to push back up to it, and begins its descent. And ultimately, after the break of this wedge, the stock fell from approximately $70 to around $40. So it lost not quite half of its value. Here's a wedge which has not broken as of this recording, and it illustrates nicely how it can be a useful guide for buying and holding a stock, or for waiting for a short signal. In this case, such a signal has not transpired yet. Here's another example, Kirby, KEX, which illustrates a very long upper trend line and an intermediate term line beneath. And in this instance, it's starting to damage that line somewhat, but it has not closed beneath it, so the wedge is still considered intact. Let's take another example. In this instance, we've got a couple of wedges historically, and they behave in different ways. The first wedge broke at around the $52 price point, and that preceded a drop in value of about 20%. Now, although it couldn't have been known at the time, a new wedge was born from that initial drop, as can be seen here. And as before, it failed the wedge. However, it did not fall hard. It fell modestly and began to push to lifetime highs afterwards. So a broken wedge doesn't necessarily mean a great short position. Indeed, what often happens is that when support fails, the role of the line simply changes from support to resistance. So in this case of EEM, it broke here, fell somewhat, but then began bouncing back up to its old support line.